Hello, everybody, and welcome back to the Last Honest Realtor podcast. I'm your host, David Fleming. Thank you so much for joining me here today. And in case you missed it, I think we did a couple of really cool podcasts over the last little while. Previous podcast was a crossover with my friend and colleague, Anya Ettinger, who is a lot younger than me, so it was very interesting to see our real estate perspectives, where they meet and where they diverge. Now, before that, I did a podcast called Why People Love to Hate Toronto Real Estate, and that is what you referred to as a doozy. Now, today I want to talk about pricing. I want to talk about pricing psychology and strategies in the 2026 market. I want to talk about what's working. I want to talk about what's not. But before I get into that, I want to do something that I am so used to doing, which is going off on a wild tangent and also talking about history, because I love to go back in time, right? Listen, the year 2000 was a long time ago. I think there was a song about it. I was in business school at McMaster University, and I was obsessed with the financial markets. Now, I had basically concluded I was going to be in the markets somehow. I wanted to be a finance bro. Wonder how that would have turned out. But it was an interesting time because it was during the tech boom. And many of you experienced that. Many of you are reading about it in books, but it was wild to see the fluctuations in that market. Every single day, I would go to the McMaster Business Center, Michael DeGroot Center, and you'd have the ticker on the wall, and you'd see this stock went up 42%, and another stock's doubling, and it was wild. And the point I'm trying to make, guys, is that looking back historically, I mean, these weren't really based on what you would call fundamentals. Now, not to insult the financial markets, the individuals who work in that, but I think we can agree, because the conversation today is going to be about pricing, is that in the stock market, a lot of times, prices aren't based on fundamentals. And what I would say is this. So again, I'm dating myself here, but when you had this tech boom, you'd have somebody that would have an idea for a company online on the internet. So picture like pens.com. Someone would bookmark pens.com and say, listen, I'm going to start a company. We're going to sell pens on the internet. And then they'd get, some seed money, and all of a sudden the stock's worth $500 million. That wasn't based on fundamentals. And what I've always found, and I am no expert in this, so if you are working financial markets, do not want to get in your grill here. But if you have two auto stocks and one selling at a PE ratio of 10, the other selling at a PE ratio of 110, I find it hard to say that that's based on fundamentals. I would say that there is so much emotion that goes into it. And now we have high frequency trading. You used to look at obviously the institutional money versus, the people day trading on Robinhood. But the point is, there's no fixed value on the price of real estate. And you might say the same thing in the financial markets. But if you have 10 million shares trading of a certain stock in a day, I'd say there's a fixed value, wouldn't you? If you have 10 million shares trading in a day at $3.40, you're not selling yours for $8. Seems to reason. But in real estate, properties can sell for more or less because of a host of different variables. And this is what I learned eventually when I got interested in the real estate market. I'll save you my life history, but when the tech bust happened, and I've told this story in another podcast, listen, I lost my life savings at age 20 on Nortel Networks. And I did that in a full podcast. I had a stockbroker in his late 60s who'd been through every single market cycle tell a 20-year-old kid to put his life savings into one stock. Every dollar I ever made making shish kebabs at Bruno's Fine Foods, bartending at Shark City, waiting tables at Eastside Mario, pumping gas at Sunoco, put it all into one stock and wrote it from $50 down to $2. That was the professional advice I got. So yeah, eventually I became a little bit sour in the financial markets, but I love markets. I love pricing. I love the dynamics. And I discovered real estate where you can, I don't want to say manipulate, but you can influence the value of the asset through the presentation, staging, for example. If you think staging doesn't work, you and I aren't going to be friends. Okay? This is what I do all day, every day. We do pre-listing renovations. We know how to increase the value. Marketing, yeah, it's a thing. It's been around for about 100 years. The listing agent, good or bad? Are they experienced? Do they know how to talk to other agents? Negotiating. What about the weather? Talk to me about the month of January and how that affected values. The emotional connection. And that is part of staging. I had somebody say once, oh, David, you stage functionally, but so-and-so stages emotionally. I'm like, how do you stage emotionally? It is a thing. Somebody once described, I'm not going to name names, a friend of mine, probably know who we're talking about, her staging's so moody. And I was like, what? What do you mean her staging's moody? And it sold for $1 trillion. Now the listing pricing strategy, offer nights, and how that plays into emotion. And a lot of people aren't going to like what we talk about today, manipulating the values. And if you're in the peanut gallery, which is the word I have for the people that just love to comment from a place of hate, you should watch my podcast on why people love to hate Toronto real estate. But you're not going to love when I talk about the fact that, yes, you can not manipulate, but you can certainly influence the value through offer nights. So that is what we're going to talk about today, guys. Excuse the lengthy intro, as I warned you. But when you look at the financial markets, and yes, you can say that you can change the way that something is valued because, as I mentioned, it's not always based on fundamentals, but intrinsically on the very day of trading, if there's 10 million shares, they're all going to trade for the same-ish price. Real estate's a completely different animal. So riddle me this, Batman. How do you price a property for sale in today's market? That's what we're going to talk about today. How do you price a property for sale in this market? So here's a story. Oh boy, he's taking off his glasses. I got a call yesterday from somebody who we'll call Becky. Actually, no, Becky is my name for like the young, annoying real estate agent. Nancy. I'm sorry if her name's Nancy. I really am. Nancy or Nancie? Don't worry about it. So Nance gives me a call and says, I'm looking at your latest listing and I'm curious to how you arrived at the price. I said, well, Nance, do you think it's too low or do you think it's too high? Nancy said, I think it's too low. I think it's $200,000 low. I said, okay. Nancy says, full transparency, I'm prepping a very similar listing. And she says, you're priced at $789. We're putting ours out in the high nines. I said, hey, listen, you want to jump off a bridge, go for it. I didn't actually say that, but I said, okay, I'm listening. And she said, what numbers did you use to justify your price? I said, the same numbers you're using to, for some reason, overprice yours. And she said, well, I'd love to hear it. Walk me through it. So here's some numbers I'm going to throw at you guys. She said units were selling in the high 900s. She said there was a sale for $1 million. Now, my unit's 1,100 square feet. There was a sale for $1 million that was 1,550 square feet. It's called math. It's been around for a long time. Now, that sale was also a year ago. So I said, Nance, there are two sales in the high 900s. Both of those units were 1,500 square feet. One was 1,492, Christopher Columbus, and the other one was 1,505. My unit is 1,100 square feet. You know what she said? And? I said, and there's a difference. She goes, not a $200,000 difference. I said, Nance, what's 6 times 4? She said, do you really want me to answer that? I said, yes, I do. She said, 24. I said, so what's 600 times 400? Amazing thing is she said, I don't know, right? Add some zeros. So I said, listen, at about $600 per square foot, which is what these units are going for, the 400 square foot difference is $240,000. So you're right, Nance. It's not a $200,000 difference. It's actually $240,000. We're overpriced at $789. And then she said, well, what about historical comps? I said, great question, Nancy, with an IE. I said, our identical model sold a year and a half ago for $875, fully renovated. So take off the reno. I mean, I don't know. What are we, $820, something like that? Could be around $800. Now talk to me about what the market's done since then. She said, well, don't you think the market is doing well in this building? I said, statistically, the 416 average home price is down, the 416 average condo price is down 13.6%, Nancy. And if you take 13.6% off of that $820,000 number for that same unit that is ours, mirror image, but fully renovated, we're actually terribly overpriced. She said at the end, thank you. That's a very interesting perspective. I said, it's not a perspective. It is facts. It is math. So what I think happened is that Nance, who, by the way, called from a 705 area code, Nance either has a seller that wants too much and Nance can't do anything about it, or Nance really has absolutely no idea what's happening in this area. Listen, I don't sell real estate in Barrie. I don't understand septic tanks. I don't know about acreage, well water. I would not go up there and do that. The point I'm trying to make, and hopefully you don't think I'm a dick for doing that, but that is more or less the verbiage of the conversation, is that pricing properties in today's market can be very difficult. And that's before we've even got to strategies. So I want to preserve some anonymity. Let's just say that my clients for this particular unit are in respective industries where they are really smart. They're smarter than you, they're smarter than me, and they work in numbers. I don't think they would have signed off on this listing without us going through all of this. I think Nance has a serious problem on her hands, but Nance has absolutely no idea how to value it. I actually said, sorry to go back to this, I said, if you had a unit that was 700 square feet and a unit that was 1,000 square feet, wouldn't you say they're probably pretty different? And she said, well, they could have similar finishes. They could have similar layouts. I was like, you absolutely lost me. 1,500 square foot units sell for $950. We've got an 1,100 square foot unit, and she's saying it's the same thing. So that's your first problem. Your second problem is, my goodness, what is the listing pricing strategy? So again, let's go back to a little tangent here. I want to talk about underpricing with offer dates, because if you're a real estate novice, you have no idea what I'm talking about. If you've watched this before or have any interest in real estate, you probably do. The underlisting strategy. You got a house worth $1 million. Price it at $799, throw an offer date on it, and maybe you can push that price up. This strategy has been around for longer than I have. I got into the business in 2004. I immediately saw this. The funny thing is, in 2004, you'd have a house listed at $399. You'd get 8 offers and it would sell for like $422. The spread, or the lift as we call it, was so small. You'd offer like $419, and then you'd be like, you're in the top 2. You'd be like, oh my God, $419. Okay, I'll do it. I'll go to $421. And then you lose to an offer of $422. I mean, at the peak, it was just wild. You had underlisting by 30%. So we began to see offer dates on condos in the late 2000s. Again, I go back to distinct memory at Mozo, 333 Adelaide, $299,000 condo, 14 offers, and it sells for $333. And my clients at the time, I remember those guys were like, I think they were from Scotland. They emailed me and they're like, we've decided to opt out of the current real estate bubble. I was like, what? Opt out of the real estate bubble? They just got tired, and someone probably told them this is crazy. And anyways, that's a $750,000 condo today. So by the peak in 2021, 2022, every condo had an offer date. And I remember getting offers. I had 24 offers on a condo on Fieldway at Bloor and Islington. I had 311 Richmond. No offense, but like, it's a value building. It's a great building, but it's not like the gold equivalent of real estate. I had 20 offers on a unit in there. That's what the market was. But what about now? So we could talk about this all day long. How do you price a property for sale in this market? Let me divide this up into bullet points just based on a few trends that I'm seeing out there in this spring of 2026. We'll go through these one at a time, and I'll try to use some recent sales to explain. So first and foremost, location. It's kind of important. Location. How's the saying go? Location, of course. So the 905, it sucks, right? Not necessarily. A colleague of mine was in a 34 offer melee in Milton the other night. So we can't just say, well, the 905 is weak, so let's go with a different strategy. What you have to do is look at what's happening in your location. And if people are underlisting and they're getting multiple offers an offer night, absolutely, go ahead. What you absolutely cannot do, what you cannot do in this market, and there's something to be said for being creative or being innovative, but if every property in your area, and say you're in some area of the 905, and every property is sitting, and you decide you're going to underlist and hold back, the buyer pool doesn't understand. They don't get it. So listen, I've got a place in Oakville in an area where nothing is selling and everything is sitting forever. Let's say it's a $2 million house. Do you think that listing at $1,299,000 with an offer date is a good idea? Probably not. But in other areas, in other product categories and other price points, it might be. So the first point I'm going to make today, guys, is it is amazing how many agents and sellers are ignoring what's happening in their area or their price point or their property type and simply going with what they want or what is comfortable. You absolutely positively have to look at the location, and you have to do some market research in order to figure out what listing and pricing strategy you should enact. Now, our second point today, houses versus condos. I'm going to say it's simply suicide to underlist a condo and hold back with offers. Now, it's happening, not with success. What I will say is this, from a buyer perspective, there's a lot of condos in the market. Condo prices are declining. It's a buyer's market. Did I say that? There's a lot of competition. Ergo, if you're the seller or the listing agent that decides I'm going to list low and hold back, if I'm a condo buyer, I won't even look at it. Wouldn't even consider it. And I don't even care if it's a cool, hot loft. If every condo is sitting on the market and being reduced and that metric is declining, why would any buyer look at your condo where you're holding back offers? So I always look for the way to be different, be contrarian, be better, think outside the box. That ain't it. I think that there's a certain arrogance among the sellers that are listing low with offer dates for condos. There's a naivety. And then maybe the last part of it is that there's a hope. There's a wish. There's someone that says, I'd really love to get 500 for my condo, even though like it's worth 460. And they're like, you know what I'll do? I'll price it 429.9 with an offer date. It's not going to work. The comps are there and your competition is there. Now, having said that, a colleague of mine the other day said that she did this and it worked. I couldn't believe it. Absolutely couldn't believe it. But is that the needle in the haystack? Is that the luck? It's not the norm. And she said she did it in like, I don't know, a pretty crappy building. So I don't know how that worked. I don't know why that worked. But I would say that I'm not looking for that 1 in 100 if I'm listing a condo right now. And I'm going to come back to this after with exactly how to price a condo when you are going with the fair market value approach. Now, third point here, the A properties are selling and the Bs aren't. So what I mean by that is if you have a little semi-detached 3-bed, 2-bath, very typical listing, and it's worth 1.3, and you're like, okay, I'll do the, $1,099,000 hold back. If it's not a great house, it's not going to get the offers you need to push it to the 1.3 price or more. So be honest about what you've got. Look around. What do you have? And this is incumbent upon the listing agents also to look at what you've got. Now, far be it from me to say, I think we do a very good job with our listings. We like to take properties that are Cs and Bs and try to turn them into As. We do pre-listing renovations, right? It goes beyond painting now. We've done new countertops and light fixtures, finished basements. We've done all kinds of things, trying to turn a C or a B into an A. But you have to be honest about what you have. And then you've got to look for the asterisks. So let's say that you have an incredible designer house. It's an absolute A. And David said, well, the A's are selling, but you have no parking. And you're on a street where not a lot of people have parking. So the street permits, one per house, and the street's busy, and it's the dead of winter, and we've got massive icebergs. There's no parking anywhere. Now, do you list that low with the offer date? I mean, people are still doing it, but you got to be realistic. You might have an A interior, but you have an asterisk. So I would still say that those people are probably going to do the list low strategy, but then you've got to come back to your expectations. Is this going to work? And what is your plan B? Now, another analogy, because you know that I like them. Let's say that you have 1,000 mosquitoes and they're all buzzing around at your cottage. They're on the eaves trough, they're on the roof, and then you turn on a light. 998 of those mosquitoes are going to go over to that light. That's just how it is. Whether it's mosquitoes to a light or whether it's the proverbial moths to a flame, that is what happens. Now, let's say that you have 12 houses on the east side, all with offer nights on Monday. This is how the offers are usually distributed on these 12 houses. 0, 1, 0, 2, 1, 1, 14, 2, 0, 1, 4, and 2. Did you follow that logic? The A, the best one, it got 14 offers. And all the other ones, they're not going to sell. They're going to be relisted. And that is what we saw throughout 2024 and 2025. Was the realist proportion was massive. And the one that got the A, the 14 offers, most of those people that made the offers have absolutely no chance. But it's a buyer psychology in this market, is they say to themselves, I don't know, I got nothing to lose. Maybe because they think there's more inventory coming out or because they just want to take the chance. But let's say you've got that 1-3 house and it's a $999 list. The buyers are making those 1-1 offers. Hell, the buyers are making the $999 offers. And they should be going to one of the other houses because it's a great opportunity. But that's what's happening in this market, is that the one house, the best house on that offer night, is getting all of the offers. And that's problematic for the other houses. So what I mean is, if the A's are selling and they're selling well, you've got to look at your house and you've got to say, what do I have? Now, I've had listings in the past where I've said, listen, we're doing the offer night strategy and this has a 50-50 shot of working. And sometimes the sellers are great. Sometimes they're like, what do you mean? Are you setting us up for failure? No. What I'm doing is setting us up with a plan A and a plan B. The plan A is going to get us the most money if it happens. The plan B might get us the same amount of money. We're just going about it in a different way. There's nothing irresponsible about having a plan A and a plan B. It's actually very responsible. What's irresponsible is when somebody tells their seller, hey, it's a great market out there and everything's selling. And they're like our friend Nancy, who can't do math and doesn't understand different square footages. And they say, well, this house 2 streets over got 12 offers on offer night and they listed here. So let's do the same thing, except they have no parking or their house is in B- condition. And then when they don't get their offers on offer night, they have absolutely no idea what to do. So I've been prepping my clients and saying, if we sell on offer night, that's great. If we don't, and again, you don't have to. You can get 0 offers, 1 offer, 20 offers. You don't have to sell. But if you do not sell on the offer date, we have to understand that we are relisting higher. We have our 1-3 house. We're listed at $1,099,000. Hey, listen, we get no offers. We relist at 1-3. We get 2 offers, and the highest is 1-1, 1-1-10, 1-2, 1-2-7. You don't have to sell. So you go and relist. Now, my 4th point here. Okay, if you do underlist and hold back for a non-A property, you might have to work. You got to get grimy. Here's a great story a colleague of mine told. And the peanut gallery might have an issue with this story, but I want you to see it from the perspective of the listing agent doing her job. There's always that kind of like fairness and blind bidding and meh. Let's say that you are the listing agent for a house and your expectation is 1.4 to 1.5 roughly. You price it at $1,199,000. You have 0 offers. It's not an A. It's not. You have 0 offers. Now, a colleague of mine did this. Her offer date was at noon. She had 0 offers. And this is a 1.4 house, but it's priced at $1,199 and, it's got an offer date. We're not interested, whatever. She got on the phone. She said she had 50 showings. She called 50 agents. Hey, there's nothing on the table. Would your clients like to come in? Some people hummed and hawed, but she pushed and pushed and pushed. By 8 o'clock that night, she had 4 offers. 3 were terrible, and 1 was over $1.4 million. So here's where the peanut gallery is like, oh, if 3 are terrible, then the one person overbid at 1.4. They didn't overbid. It's a 1.4 to 1.5 house. In fact, you could argue if they got it for $1,410,000, they got a hell of a deal. But the agent that brought the offer understood they don't have to sell. They could relist for 1.5 tomorrow if they want. So point is, that listing agent worked. That listing agent did not just sit back and say, oh, I can't believe it. There's no offers on my listing. That listing agent got on the phone, did her job, called 50 agents, got voicemails, sent texts, encouraged them to bring offers. And had the 3 terrible offers not been submitted, maybe the person that offered 1.4 plus would have still offered 1.4 plus. But to the listing agent's credit, by getting those 3 other offers, it gave her leverage. And again, peanut gallery doesn't like this. Hey, you're manipulating the value of real estate. It shouldn't be an investment. It's for homes, blah, blah, blah. I get it. Our job is to sell it for the highest price possible. My colleague did nothing wrong. She drummed up interest. There was a buyer that came and offered 1.4 plus. Didn't have to. And you're going to say, well, if the other 3 crappy offers didn't exist, she would have offered 1.4. Yeah, I think she would have, because that agent understood that she could relist at 1.5 the next day. So I had that happen last year. And I think I've told this story before, but it's kind of apt right now. We had a 1,099 listing. We got 1 offer. What'd they offer? 1.3. And you're going to say, why would they offer 1.3? They should have offered the list price. The agent knew we're not taking the list price. It's not worth that. Hell, we could have said it's worth 1.35 and you're getting a heck of a deal. But that agent knew and the buyer knew. They saw it as an opportunity to go in at their price. My sellers accepted. Yeah, they probably would have liked a little bit more money, but at that time, that is exactly what made sense. My next point, guys, and this is really important, especially in the context of today's market. If you bought in 2021 or 2022 and you know that you're going to lose, you have to understand the buyer psychology. So let's work through an example. Let's say someone bought at the peak in 2022 for $1.6 million. Now this person's moving to the USA for work, so they're selling their house. They're not testing the market. This is a sale. They are going through with it. Now, they're hoping to get 1.5. Their agent says they should probably expect 1.45. This area is down a little bit since the peak. So what do they do from a pricing strategy? They figure, let's list this insanely low. We'll get a ton of offers, and then we'll get the leverage that we need. This has always worked. So they list this at $1,199,000. Now the buyers see what they paid. They paid 1.6 at the peak, and they're now listed at 1.199. And then the buyers think, well, they're going to want something stupid. So the buyers see the 1.999 and they think, I'm not falling for that. so they don't make a bid. Now it sucks because the sellers, they're like, we were hoping for 1.5, we would take 1.45, and I'm going to be sarcastic, so bear with me. If only the seller could do something to say, hey guys, I would take 1.45. Now what could they do? Can you think of anything? Can you think of anything they could do that would make the buyer pool think that they would sell for 1.45 when they bought for 1.6? How about not list at 1.199 with an offer date? How about list at 1.45 with offers anytime? People can't help themselves. And that's the irony. This is a real story. This happened. This house was listed at 1.199 and it got 0 offers because the buyer pool just said, these guys bought at the peak, they probably want something crazy. And so this is the risk that you run when you do the underprice with an offer date strategy. In a market that's going up, sure, who knows what this is going to go for? Go for it. But in a market that has declined, the buyers can see that you paid 1.6. They know that the market's down. You're at 1.199 now, and they're like, I have no idea what these people will take. Maybe they'll take 1.4. Maybe they want 1.6. Maybe they want 1.75 to cover their costs. Because we do see that. I've done this in Pick 5. I did a Pick 5 a couple weeks ago, comparing properties that sold in 2021 versus the ones that are up for sale now in 2026, the same listing. So you have some people that, they've listed 15% below what they paid for it. Then you have people that have listed higher. It makes absolutely no sense. So in this context, I would say it's an opportunity for a buyer to maybe get a deal if the buyer wanted to partake. So take that example there when I said you've got a 1.6 house and the agent's saying it's probably 1.45 and the seller's like, I hope I get 1.5. You list it for 1.199. There's 0 offers. Maybe you're the buyer that goes in at 1.4 and you're like, I think this is actually a really good deal. But in that case, the sellers shot themselves in the foot. Nobody offered. And I know that, the peanut gallery is going to say, well, hey, wait a minute. Why don't you offer the list price? You've got to be realistic. If that's a 1.45 house and they're listed at 1.199 with the offer date, I mean, you could offer 1.199. They're not going to take it. But I think it's an opportunity for that buyer. So for all the folks that have bought and they know they're losing money, and we've had a few of these people this year. I've sold properties for people where they have lost money. It happens in any market. Didn't happen in real estate for, the better part of 2 decades because the market went up. But that's where we are now. So if you're one of these folks that's bought at the peak and now you're selling and you acknowledge a loss, you have to remember the buyer psychology. They just don't trust you. Give them a reason to. My next point. Oh, this is another doozy. Condos. Do you build in a buffer? Now, consider this logic. Let's say that an asset, a house, a condo, or I've been watching these YouTube videos lately where people film themselves bargaining for a hockey card at a trade show. I'm a nerd, right? So that's what I'm into. It comes up on my algorithm. So let's say that someone's got a hockey card in a showcase listed with a $1,000 sticker. Now you offer $800. What is the first thing that the person selling that card is going to think? The first thing they're going to ask themselves, how much more can I get? Now, that person's not saying, can I get more, but how much more? Do you follow that logic? Because the seller merely assumes there's more because no one ever offers their best right at the onset. And that's part of the psychology that exists in today's market. Now, it's almost counterproductive to come in with your best offer, knowing human nature and what it is. But negotiating is not simply signing an offer back X number of times until you meet in the middle. If that was the case, then it would be a heck of a lot easier. So think of this logic. A property is listed for $1 million. The buyer offers $800. The seller says this is a really bad offer and signs back at $990. The buyer comes up to $825. The buyer agent says, hey, listen, we're doing all the work here. You came down 10 grand. We went up 25. Come on, let's go. Let's work here. The seller signs back at $985. The buyer agent says, what the hell? What's going on here? We're negotiating in good faith. I hate that term. Do you ever say to someone, listen, I got to be honest with you, I'm negotiating in bad faith? What does in good faith means? It's silliness. But that buyer agent says, we are negotiating in good faith. Now, here's the problem. The agent seems to think that this exercise is predetermined, and this is just a straightforward process to meet in the middle. Yes, the middle. The middle where everything is fair. Just meet in the middle and it's fair. But But the problem is you can move the goalposts. I've been on this side many times before, and this is a recent example. So I had this situation where my seller, and I told you they signed back at 985, and eventually my seller said 965, it's my absolute best and final. What did the listing agent say? He said, let's just meet in the middle, 900. The middle of what? You offered 8, we're listed at $1 million. The middle is 9 and it's somehow fair. So here's the problem. In this case, I said to this agent, listen, Jimmy, by your logic, had you started at 700, the middle would be 850. Actually, Jimmy, by your logic, had you started at 400, we could have just met in the middle of that. So negotiating is not sending it back and forth and meeting in the middle. But the problem, and I'm going to take this back to the condo market, is that condo sellers need to understand the buyer psychology and they have to decide, do I build in a buffer or not? So let's say that you have a condo you believe is worth $400,000. If you list it at $399,900, you got no room to move. Now, I think that you're going to have a lot of interest, but a lot of buyers in this market are just going to offer you $350,000. Let's meet in the middle at $375,000. Do you see where I'm coming from? So what sellers end up doing in this situation is they list at $429,000. Now, if you list at $429,000 and your condo's worth $4,000, doesn't the buyer think they're getting a deal when they get it for $4,000? Again, by that logic, you could list it for $1 billion and they're getting a heck of a deal at a mere $1 million, being silly to prove a point. $400,000 condo, list at $429,000, buyer comes in at $380,000, you end up at $400,000. Buyer's like, I did good. I got that below the midpoint, because 80% of negotiations meet in the middle. But you actually did pretty well because you've got fair market value for it. So I am not telling you whether you have to build in the buffer or not. Every seller is different. It is about risk reward and it's about expectations. And of course, it's about your resolve. But, your resolve sometimes can work against you. If you've got a property that's worth $400K, you list it for $399, it's on the market for 6 months, you're not getting $399. There's an inverse relationship between days on market and leverage. So in this market, I might be inclined to build in that buffer. I hate to say it, but you kind of have to because the buyer wants a discount. The buyer does not want to pay the sticker price. And while I understand there's always the exception to the rule, there have been a few condos that have sold in offer nights. There have been a couple that organically, there's one on Lombard, 77 Lombard, I think. I remember having a listing in there. My God, toughest listing of my life. I'm going back to like 2011 or something. But then all of a sudden, a unit came out there organically and I ended up with 3 offers. Organically, no offer date. It just happened to be a nice unit and it sold over list. But that is not the norm. So I think at the end of the day, recognize buyers are not paying the sticker price. You have to let them think they're winning something. And that is where you decide whether to build in that buffer or not. Now, my last discussion point for pricing in this market is about switching strategies and listing low with an offer date after you've already been out higher. Now, do you know what a placebo is? A placebo is a pill that does nothing, but you're told it'll do something. And so it's sort of prescribe this and maybe the patient will think that they're getting better and they will. Now, whether you're doing this in tests, A versus B testing, or whether it's just a doctor that's like, here, you got to take this, you'll feel so much better. The point is, you don't know it's a placebo. That's why it works. If a doctor said, I'm prescribing you something, you said, okay, what is it? Oh, it's a placebo. You're like, what? It doesn't work. This has always been my metaphor. For when you have a property listed for $1.4 million, it's not selling. You go to 1,349, it's not selling. 1,329, it's not selling. So then you list at $999 with an offer date. What? You just showed your hand. You were at 1,329 and it wasn't selling. So it's worth 128. And now you're at $999 with an offer date. Who in their right mind is lining up to bid? And I've always found this fascinating. And it's the same players, the same people. They don't have a better way of doing it. Now, the reasons, usually it's a seller that wants too much. And then the listing agent's like, I have no idea what to do here, so I'll try this. And I've written about this on my blog many times. I've written a few blogs about, the listing or the property that was listed 36 times and some pretty crazy stuff where you see it being listed over and over in multiple offer nights. You can't trick the market. So if you were to take a property in a red hot market, you list it at $999. Where are the comps? Are they 1.2, 1.3, 1.4? Yes, you've got upward momentum and you have no idea. There's no ceiling because you have no idea what this could do. The complete inverse is to take something that was sitting in the market at 1.399, 1.349, 1.329, and then turn around and list it at $999 with an offer date. Who are you fooling? Who are you tricking? Another metaphor, it's like the reverse peephole, you know? Like, remember the Seinfeld episode? We've reversed our peepholes. Like, it's literally like you've taken something that's supposed to go one way and you've completely turned it around and it's backfired. That is crazy to me. People that are doing that in this market. It reeks of desperation, and all it really does is just prolong the process. It confuses the buyer pool. It actually pushes people away. That property at 1.329 that was marked down from 1.349, that was marked down from 1.399, maybe if you put it at 1.299, you called all the agents that have shown it, you did some marketing, maybe you revise the CMA, show the seller, hey, listen, like this is a 1.25 house. That's doing your job. Blindly dropping it to $999 and setting an offer date, it's not going to work. And it reeks of desperation. And I actually think it's counterproductive and you're simply pushing the buyer pool away. I've had a couple of colleagues, and I'll always tell the truth, right? I'm not always right. A couple of colleagues said they did this with condos and it worked. A colleague of mine was like, we were sitting in the market at $599 forever. We priced it at $499. We got 6 offers. Now, they ended up taking something in the middle. So maybe it was just a means to an end. But again, I go back to that 1 in a million. So maybe they were creative and maybe they thought outside the box. What I'm saying is you can always look for the one example. It's kind of like when you've got 25 comps to show your seller and they ignore them all and they go, what about this one, right? You can always pick the one. And my colleague said that she had done that on a condo in Vaughan and it worked. And maybe if you don't sell in the offer night, maybe that's an idea to just get as many people through as possible, get their name, their contact, and then go and call them and go to work and do your job and call them. Can we do a deal? How do you value this? But for the most part, listing low with an offer date after you've been listed higher previously, it's not going to work in this market. So that's it, guys, for this week. That one was quick and to the point, but I think it's incumbent upon everybody in this market to understand listing and pricing strategies as they continue to evolve. You see what works, you see what doesn't. And most of this today, is information for you on the sell side. Of course, as a buyer, you're also going to want to know why sellers are doing what they're doing, how they're doing it. But for the most part, I'm seeing that there's a lot of listing strategies on the sell side that aren't working. Many were doomed from the beginning. And it's the usual reasons. You don't understand the market. You're not evaluating it. You don't know how to price. You don't see what's happening out there. And when the market gets really tricky and you really need to connect with the seller about expectations and pricing, what I'll do is I'll start a Google sheet and share it with them. Here's everything in our price point that came out last week and a column for offer date, yes or no. And then on the offer date, what happened? Did they sell or did they not? How many are being relisted? And there's been markets before, and I find usually like post-May 2-4 weekend in that kind of first-time buyer, $1.3 million range, everyone's bought. And people always think like, man, June is the best time and it's so nice out. And what I find in that price point is that a lot of those people have bought. And the ones that haven't, they're tired and they're looking forward to summer. So I had one a couple of years ago where I, 3 weeks in advance of our listing, showed exactly what's happening in the market. And the offer success rates, like an offer date, a property with an offer date, does it sell or does it not? The offer success rates were like 15%. But then your seller's prepared. Okay, we're taking our 1.3 house, we're listing it at $999 or $1,099,000. We believe we have a 15% chance of being successful. It's not a great chance, but at least you know. You've got to do the research. You've got to see what's happening in the market. Agents have to prepare the sellers. Sellers have to ask agents, what is going on? What is our expectation? And is our expectation in line with reality? So that's it for this week, guys. Thanks so much for watching, as always, on YouTube. Drop me a comment. I always love to read those. If you're listening, please remember to like, comment, or subscribe wherever you get your podcasts. And we'll see you here next time on The Last Honest Realtor.